So, good morning, students. Uh, See, yesterday we were doing leave encashment. Okay, no? So, leave encashment, which we started yesterday, that leave encashment, I told you that leave encashment will be taxable if you are getting it while you are in service, whether you are a government employee or a non-government employee. In both the cases, the leave encashment will be taxable. You know, while you are in service, if the leave encashment is given, then it is taxable. But if the leave encashment becoming due on retirement or death, whichever is earlier, then in the case of government employee, that will be fully under which section? 1010 double A. And if non-government employee is there, which employee? Non-government employee is there, then the leave encashment will be exempt. But it will not be exempt fully. It will be exempt subject to limits. What are the limits? A, B, C and D. Whichever is lower. Okay. Now see, A, always the actual amount will come. Okay, no? Actual amount of leave encashment. B, maximum limit of exemption given is 25 lakhs. How much? 25 lakhs. Okay. And C, leave your phone. Running the country is done with Mr. Modi. Maximum 25 lakhs. Okay. And C limit is 10 months salary that you will get after multiplying your average salary with 10 months, because we are going to calculate average salary for limit D. Okay. So limit D says that average salary per month into leave credit. Now this leave credit you have to calculate as at the time of retirement. So at the time of retirement, how much is the total leave credit available with you? Yes or no? So that leave credit you have to calculate at the time of retirement multiplied by average salary per month. See, according to the Income Tax Act, how much leave encashment you should get? Leave encashment you get equal to the leave credit available with you multiplied by your last salary. But last salary can be manipulated, yes or no? So we will not take the last immediately preceding month salary. What we are going to do? We are supposed to take the average, and this average salary you know how to calculate it. We have already calculated it once. What do we do? Basic of last 10 months, DA in terms of last 10 months, and turnover commission of last 10 months. Okay. We have done this calculation for not covered by POGA employees, if you remember, for gratuity. Yes or no? But there, no, what we used to take? We used to take 10 months excluding the month of retirement. So there it was written the average salary is calculated for 10 months immediately preceding to month of retirement. Immediately preceding to, but here they are saying that you have to calculate the average salary for 10 months immediately preceding the date of retirement. Now what date of retirement? See, for example, your date of retirement was 31st December 2025. This is the date of retirement. You will take 10 months. You will take starting from December. You will also include the month of retirement, because they are saying that you have to take 10 months prior to date of retirement here. If you will see what is written here, date of retirement, and see, if I will go to gratuity, can you see gratuity? In gratuity, if the employee is a non-government employee not covered by POGA, here also we used to calculate average salary. Average salary for 10 months immediately preceding the month of retirement. Here the word written is month of retirement, and there what is written? Date of retirement. So for gratuity, we used to ignore the month. We used to ignore the month in which the assessee is retiring. Immediately prior to that, 10 months we used to take. Yes or no? But here, we have to take the month of retirement also. For example, 31st December was the date of retirement. You have to take 10 months immediately prior to date of retirement. And how are you going to take? You are supposed to take December also and 9 months prior to that. Meaning from February to December. So, February, March, April, May, June, July, August, September, October, November. No, not from February, from March. From March. So, from March to December. From March to December, we are supposed to take. Now, see, if the date of retirement was post December 2025, then 10 months immediately preceding to date of retirement. 10 months immediately preceding to, then start from November. Start from, so November, February to November. February to, but what if the date of retirement was 16 December 2025? Then 15 days of December you are supposed to take, 9 months prior to that, and half month prior to that. Getting my point? So, sir, so this way you will have to calculate the 10 months. Basic, DA in terms, turnover commission, add all of them and divide by 10. Get what? Average salary per month. Yes or no? Sir, somebody will say, sir, what is the date of retirement was 7th of December. Come on, 7th of December 2025. Can this be the date of retirement? Yes. So take 7 days of December, 9 months prior to that, and 23 days prior to that. Or no? Get 10 months. Okay. Basic salary of 10 months. DA in terms of 10 months. And turnover commission of 10 months. Divided by 10. Did you understand how to calculate this average salary? For exemption under section 1010AA for your leave encashment. Now you are supposed to use this average salary multiplied by 10, you will get limit C. Yes or no? That is 10 months salary. And now you are supposed to do the calculation for leave credit. Now see, leave credit, which you are going to use for exemption, which you are going to use for under section 1010AA. How will you calculate that leave salary? Come on, tell me. Well, very simple. First of all, what are you going to do? Supposed to calculate that what was the rules of your employer. Okay. So your employer was allowing some days leave. My example yesterday, how many leaves I was allowing? 45 days, if you remember. I allowed how many days? 45 days. 45 days for your entire service or for first year? Second year, 45. Third year, every year I was giving you a leave. Employer was allowing a leave of 45 days. So this way, for how many years you have worked for me? Meaning that the number of your years of service. But those number of years will be completed years. Which years? So for every completed year, the employer was giving you 45 days. Every completed year, employer was giving you 45 days. So 45 days you are getting for every completed year of service. So tell me, for example, if we take 20 years of service, how many years? So before your retirement, you have completed how many years with 20 years? So multiplied by 20. So every year 45 days. So for 20 years, how many days leave the employer allowed? Total leaves allowed by employer was 900 days. Yes or no? How many days? Out of those 900 days, you might have taken some leaves in the first year, some leaves in the second year, some leaves in the third year. Like throughout the period of these 20 years, how many leaves you have availed, you have taken. So for example, you have taken 480 days. How many days? So how much is the leave to your credit? Or this is the total leave. This is the credit at the end of your service, meaning at the time of retirement. How many leaves in total you have saved? 420. Yes or no? So these 420 divide by 30. Divide by, we'll have to convert the leave credit days into months. So 420 divided by 30, you will get 14 months. So 14 months leave encashment will be provided by the employer. Employer will give you leave encashment for how many months? Now that 14 months you have calculated based on 45 days leave. So 45 days leave allowed by the employer. How many days leave allowed by the employer? Based on 45 days, how many leave credit you calculated? 14 months. Yes or no? Don't you think that this can be manipulated? How? You tell your employer that employer, instead of 45 days, start giving 3 days. The employment contract, instead of writing 45, you can tell your employer to write 60. If your employer will write 60, don't you think 60 multiplied by 20? 1200. 1200 minus 480 will give you 7 divided by 30. Ayyo, straight away 10 months in. Now you will get leave encashment for 10 more months. Can you take your taxable salary like this by increasing the leave credit? You will tell your employer not to give taxable salary, not to give taxable salary, but give me leave salary extra. Get that extra leave salary, to get that extra leave encashment, what you will do? You will tell your employer to increase the leaves allowed by him, so that the leaves credit calculated will be higher. And if the leaves credit calculated is higher, definitely you are going to get more leave encashment, can get exempted. Yes or no? This way you can take taxable salary in the form of leave encashment, take the exemption also for that. Hello? You and your employer can manipulate the leave credit. Why? Because these 45 days can become 60. They can become 90. They can become any number of days. Yes or no? As per employer's policy, employer wants to give 60 days. Who can stop me? Can anyone stop me? I want to give 60 days leave. I want to give 75 days leave. So whatever number of days the employer wants, employer can give the employer's rules. Just imagine if the leave encashment is given for 14 months, 24 months, 30 months. These many months leave encashment is given to you, meaning the leave credit which you have calculated as at the end of the service period, at the time of your retirement. If this leave credit, as per employer's rule, if we take this leave credit for exemption also, that is manipulated. That can be a higher leave credit also. Getting my point? So, income tax rule. Which rules? They have provided that the leaves allowed by the employer can be maximum. Now, for the purpose of exemption, what did I say? For the purpose of exemption, now what are you supposed to do? You're supposed to calculate the leave credit as per employer's rule. Meaning, as per the number of days leaves allowed by the employer. And now you are again going to calculate one more leave credit. Now this leave credit you are going to calculate as per IT rules, which says maximum 30 days should be allowed. Yes or no? So tell me, employer was giving 45. Employer was giving Based on 45 days of employer, how many months leave credit you calculated? 14 months. Now make the same calculation based on 30 days. Because the maximum leaves allowed by the IT rules cannot be more than, so 30 into how many years? 20. It will be 600 minus 480. You will get 120 divided by 30. According to the IT rules, the leave credit should be 4 months only. How come you are getting 14 months leave encashment? Even if you are getting 14 months leave encashment, take it. But for the purpose of exemption, we are not going to use 14 months. We are going to use 14 or 4, whichever is lower. Understanding? Hello, sir. So, how many months leave credit you will take here for the purpose of exemption? You will take 4 months. The leave credit as per employer's rules or as per IT rules, whichever is lower has to be taken here. Yes or no? Now tell me, if your employer was giving you 30 days, then don't you think leave credit calculated by him will also be 4 months? So he will give you encashment for 4 months. And as per IT rules also, it is 4 months. So 4 months, any 4 months you can take. Yes or no? Is leave encashment also you are going to get for 4 months, and for the purpose of exemption also you'll have to use 4 months. But what if your employer was giving 15 days? So 15 into 20, it will be 300. 300 minus 480. Minus, meaning that there is no leave to your credit. So total leaves allowed was only 300. In your service, you have taken 480. Yes or no? Meaning no leave credit. In this situation, your employer will not give you leave encashment only. Understanding? So now pay attention. I'll tell you one example, okay? Employer's rules. Employer's rules. You are getting 40 days leaves. How many days? Completed years of service. Completed years of service, 25 years. How many years? 14 to 25. 1000 days. Total leaves allowed by the employer is 1000 days. Out of 1000 days, no, out of 1000 days, total leave taken by the employer, by the employee is 700 days. How many days? Calculate. 300 days divided by 30. You will get, this is 10 months as per employer's rules. Employer is giving you how much? Is giving you 40 days leave. Based on 40 days leave given by the employer, you are calculating 10 months. Now, IT rules. What IT rules says? Should get how much? Maximum 30 days or 25 years? Hello? 750 minus how much? 50 divided by 1.667 months. So this or this, whichever is, so you'll take 1.67. Don't ignore the fraction, you'll have to take 1.67. Yes or no? For calculation of exemption. For calculation of, understood? No? Now tell me, what if this was 850? Possible, not possible? Calculate. 150 divided by, you have 5 months leave credit. So as per employer, encashment will be given for 5 months. As per employer, you will get the encashment of 5 months. But if you will calculate as per IT rules, now tell me what will happen. 750 minus 850, you will get negative 50. Sorry, negative 100. Okay. Negative 100. Meaning that as per IT rules, there are no leaves to your credit. What is the leave credit? Nil. IT rules says that total leaves should be how much? 750. Out of that you have taken 850. There is no leave remaining to your credit only. Rather you have taken 100 more days. According to the IT rules, there is no leave remaining. But as per the employer's rules, 5 months leave still remaining. Yes or no? And you are getting an encashment of 5 months. Take the encashment of 5 months from your employer. But don't expect that we are going to give you any exemption. Because according to us, there is no leave standing to your credit at the time of retirement. It is nil. So nil or 5 months, whichever is lower. So for here, how much you are going to take now? How much you are going to take now? Nil. So nil into average salary will be nil. So this limit D will be nil. A, B, C, D, whichever is lower, nil, meaning no exemption. Understanding? Will you be able to solve a question on this concept now? First of all, leave encashment while you are in service. Fully taxable, government or non-government. Leave encashment at the time of retirement, separation or death, whichever happens earlier, will be fully exempt. In the case of section, and for non-government employee it will be exempt. But the maximum exemption will be A, B, C, D, whichever is, remember what was limited? Actual amount. Limit B, maximum 25 lakhs. Limit C, 10 months salary. For that, average salary into 10. Yes or no? Limit D, average salary into leave credit. Average salary calculation we know, but we have to remember that for average salary we are supposed to take basic D N terms turnover commission for 10 months immediately preceding to date of retirement and not month of retirement. Yes or no? Here you will have to consider the month of retirement also. Yes or no? Okay. Next, leave credit you are supposed to calculate for exemption. How will you calculate? Leaves allowed multiplied by completed years. You get total leaves. Out of that, total leaves taken by the employee will get leave credit. Divide by 30. So you will get leave credit in months. Why you calculate leave credit in months? Because sir, average salary is also in months. You will have to convert the leave credit also into months. Yes or no? Now, leave credit in months. Now that leave credit you are calculating is as per employer's rules. As per employer's rules, what did I say? As per employer's rules, if the leave credit is calculated, then the days should be 30 days or less. Then you can take that. But if it is not 30 days or less, employer's rule was giving you more than 30 days, then you'll have to calculate the leave credit as per IT rules, which says maximum how many days? 30 days. So based on 30 days, you calculate the leave credit. Based on the employer's rule, you calculate the leave credit, whichever is lower. That leave credit will be used for exemption. Understood? Sure, sir? Now, take this. Whether you follow 115 BSc or don't follow 115 BSc, exemption for leave encashment will be available. See, gratuity exempt under which section? 1010. Gratuity. Death come, retirement gratuity. Exempt under section 1010. Even if you follow 115 BSc or you don't follow 115 BSc. Commuted pension exempt under 1010A. 1010A will be exempt even if you follow 115 BSc or you don't follow 115 BSc. And leave encashment exemption under section 1010 double A. Double A, no? 1010 double A. The notes which I have provided yesterday, no? Please make the correction over here, okay? Please make the correction. This 1010 double A. Okay. Okay. So now tell me, did you understand this much? Now, do you remember one table like this? I had explained yesterday for gratuity. The same logic goes for leave encashment. Your leave encashment will become due on retirement, separation or death. Whatever happens, what if it becomes due on retirement and received by you, and after that the employee dies, becoming due in the hands of employee, received in the hands of employee, so the leave encashment will be taxable in the hands of employee. Yes or no? Because at the time of due, at the time when it was getting due, and at the time of receipt, at both the times the employee was alive. It should be taxable in the hands of employee. After taking the exemption, whatever amount remains will be taxable in the hands of employee. Yes or no? What if it became due in your hands, in the hands of employee on retirement? But even before employee could receive it, employee died. Employee, employee died before he received. So at the time when it was received, at that time, was the employee alive? No. But at the time when it became due, at that time the employee was alive. So due or receive, whichever is, at the time of due, was alive. This will be taxable on what basis? Due basis. Because due is becoming earlier than receipt. So at the time when it became due, at that time the employee was alive. So it will be taxable in the hands of employee. Now sometimes it might also happen that retirement was supposed to be done, retirement was due later on, but before that only the employee dies. The employee dies on 6 July and the retirement was due on 30th June 2029. So before retirement, if the employee dies, the leave encashment will become due on death, will be received by the legal heirs. At the time when it will become due, at the time when it will be received, at both the times the employee is not alive. It cannot be taxed in the hands of employee. So who is receiving it? Legal heirs. So the hands of legal heirs, it should be taxable. No. For legal heirs also, this is not taxable. Why? Because it is a capital receipt in the hands of legal heirs. Got it, sir? Hello? Same thing I have explained for gratuity. Same to same. I have not changed the dates also. Copy, paste. That's it. I've just changed the word leave encashment instead of gratuity. Understood? So this is the end of leave encashment. Let's come to the questions. Which illustration we did last? Illustration number 4, no? 3 and 4 done, no? 2, 5. Illustration number 5. Okay. Start. all of you are committing almost the same mistake, not taking the proper amount of salary, right? No, see, I will solve. Wait, see, illustration number 5 is there, right? Now in this illustration, they're saying Mr. Gupta retired on 1st of December 2025 after 20 years of service and received a leave salary of 5 lakh. So on retirement, he's getting 5 lakh rupees of leave encashment. If he is a government employee, then this 5 lakh is fully exempt. If he is a government employee, what will be the taxable leave salary? Nil. 5 lakh minus 5 lakh. But what if he is a non-government employee? Now see, they are saying that other details of salary income, meaning when he retired no on 4th of December, at that time his basic salary was 5,000. At that time his DA was 3,000. At that time his commission was 500 per month and the bonus was 1,000 per month. Okay, no? Now at the time of retirement, these amounts are given. These amounts are given at the time of retirement. Before retirement, he was drawing a basic salary of how much? 5,000. So when he retired, after retirement, he is not going to get these amounts, no. He was drawing these amounts at the time when he retired. So basic salary, how much he was getting right now? So can I say this basic salary is getting at the time of retirement, meaning for November, how much was the basic? 5,000. October, November 5,000, October 5,000, September 5,000, then August 5,000, July 5,000, June 5,000, May 5,000, April 5,000. But for March and February, it was not 5,000, it was 4,000. You get it? Because salary has been increased with effect from 1st April. And at the time of retirement, if you are getting what? 5,000 means that it was increased from 1st April, paid 5,000. So 5,000, 5,000, 5,000, 5,000. You are getting at the time of retirement also 5,000. Yes or no? But prior to that, it was not 5,000. It was only 4,000. 4,000 increased by 1,000 from 1st of April. If I put this thing in timeline, no, you will come to know what I want to tell you. Okay, you have to take the salary for how many months? 10 months. Okay. So first of all, look at this timeline. Here, no. What is the date of retirement? Date of retirement is 1st of December 2025. So at the time when he is getting retired, what was his basic? At the time of retirement, it is 5,000. Understanding? So for November, October, September, August, July, June, May, and April. Can I say if he is receiving 5,000, for November also it was 5, October, September, August, July, June, May, April, it was 5 only. With effect from 1st April, it was increased by 1,000. So 1,000 is already increased in that 5,000. So what was his salary for February and March? It was only 4,000. 4,000, 4,000 increased by 1,000 and then it is 5, 5, 5, 5, 5, 5, 5. You are receiving right now. So 5,000 you have received for how many months? 8 months. 4,000 you have received for how many months? 8,000. And this is 40,000. Total is 48,000. You understand this? Everyone, majority of you committed mistake. Understood? See, they are telling you to calculate the leave encashment exemption and taxable amount also. So what are you going to say? Leave encashment or leave salary also you can say. leave encashment on retirement. How much amount? How much amount? 5 lakhs, no? Will this be exempt? Yes, will be exempt. Out of this, how much will be exempt? Under section 1010 double A. Exemption will be A, actual amount. A, actual amount. How much is the actual amount? 5 lakhs. B is statutory limit. Maximum amount under section 1010 double A, which is called statutory limit also. Yes or no? That is 25 lakhs. But wait, 25 lakhs is also lifetime maximum exemption. Yes, this is also lifetime maximum. Just like gratuity exemption, it was 20 lakhs. Yes or no? Just like pension exemption, commuted pension exemption, 1/3 or half of fully commuted pension. Those two limits were lifetime maximum exemption limits, no? So this 25 lakhs is also a lifetime maximum exemption. What does that mean, sir? From more than one employers if leave salary is received in this year. Both taken together, the total exemption cannot be more than 25 lakhs. Or you might have taken the leave salary exemption earlier. So in your life, have you already taken leave salary exemption earlier in your life? Yes. That time you took an exemption of 3 lakhs. How much? How much? Now, again you are getting a leave encashment. Now you will not get the limit of 25 lakhs. Now the limit available will be 22 lakhs. This is also a lifetime maximum exemption. Yes or no? Just like gratuity limit and pension limit. This limit is also lifetime maximum exemption limit. Understanding? So in the question, if not mentioned, nothing is mentioned, that means I have not taken any exemption earlier, then I have the full limit available. Yes or no? Then see, 10 months into average salary per month. Average salary I have to calculate. Okay, no? Next one, average salary per month into leave credit. One line blank. Now see what I'll do. First I will calculate average salary. First I will calculate average salary. Need what? Basic. Basic for how many months? 10 months. Immediately paste it into date of retirement. So date of retirement was 1st December. Prior to that, 10 months are February to November. So February to November, how much basic you have received? 5,000 per month you were receiving in November. From April, it was increased and it was made 5,000. Yes or no? So for 8 months you received 5,000, but prior to that you were receiving only 4,000 only. Yes or no? Into 2 months. So it will be 48,000 basic. DA in terms. In terms. It was 3,000 per month. Total DA. Out of that, 60% is in terms. Yes or no? You can see the question. So 60% and multiplied by 10 months. Because last 10 months DA has not changed. It will be 18,000. Now, turnover commission. Turnover commission. Why nil? Commission is given there, no? But it is not mentioned. Madam, per month. Sir, is per month. And any commission given per month, the fixed commission. 500, 500, 500, 500, 500. That is not a turnover commission. That is a fixed commission. And you're not supposed to take fixed commission here. You're supposed to take turnover commission. And no turnover commission given in the question. So it is nil. Total is 1000 if you divide by 10. Get 1600 per month. That is your average salary per month. Now you will calculate leave credit. Now you will calculate for that. Again, I will go to the question. Check what the question says. Question says that he was entitled to 30 days leave every year. Entitlement means leave the employer was allowing was how many days? So based on the 30 days allowed by the employer, this leave availed, sorry, based on this you are supposed to calculate the leave credit. So 30 days leave allowed by the employer every year multiplied by how many years of service? 20 years of service. That will give you 600 days. Out of that you are supposed to, you have taken how many days leave? So how much? 120 divided by 30. You will get 4 months. See, this 4 months leave encashment you are getting from your employer. But as per IT rules also, you will get 4 months only. Understanding? As per IT rules also, you will get 4 months. Why? Because IT rules also says 30 days. An employer is also giving 30 days. So no need to make two calculation. One calculation is enough. Okay? So sir, tell me, leave credit, how to calculate? 30 days. So 20 years minus 480 days equal to 120 days divided by 30 days equal to 4 months. 4 months leave credit you are taking. Okay. So average salary was 6,600, no? So 10 months into 6,000, what will be your limit now? Okay, 6,000. Now, average salary per month, 6,600 to leave credit 4 months. How much will be 36? 400. Whatever is, tell me how much is the lowest amount? 26, 400. This amount you are going to take as exempt. Okay, no? So, 5 lakh minus 1,400. What will be the taxable amount? 70,600. This is your taxable leave encashment. Leave encashment. The taxable encashment. Entire question, no? Only one thing is important. How to calculate your average salary. Other than that, it only. Understood, no? Okay. So now let's move on to the next part. The next part, no? We are going to do provident fund. No, provident fund will take in the end. Okay. Right now, I am going to discuss retrenchment compensation. Compensation. Have you heard about retrenchment? No. Retrenchment means what? Retrenchment means when the employer removes the employees. Employer removes the employee. One employee or many employees? Many employees. Together due to some economic reasons. Like the factory, earlier the work was done manually by workers. Now the employer has installed some automatic machine. Now one machine can do work of 20 workers. Likewise, 5 machines have been installed. 20 into 5, 100 workers are not required. Tata. Bye bye. How many? 100. Retrenchment. So if one employee is removed, that is not retrenchment, that is termination. But if many employees are removed due to economic reasons, okay, then it is retrenchment. Definitely, employer would like to save the cost, no? So, he removed many employees together. One example I gave. One more example can be the company is getting liquidated. So, in the event of liquidation, one employee will lose the job or all employees will lose. Retrenchment happening here also. Amalgamation is taking place. And in the event of amalgamation, the business of the company is taken by another company. So another company is taking all the assets, all the liabilities, entire business the another company is taking, but not taking employees of this company. Saying that employees are not efficient. How can they say that the employees are not efficient? But if you were efficient, would not have been taking over your company. Your company would have been taking over my company. So your employees are not efficient, so we don't want your employees. Amalgamated company saying, new company is saying that. New company saying that your employees are not required. We'll just take over the business. Yes or no? So the employees will lose the job. In that event also retrenchment is taking place. Tata bye bye. One employee or all of you tata bye bye. All of you. Many employees, if they are removed, that situation is known as retrenchment. It is a see on the retrenchment, no, some compensation is given to the employee. So it is a compensation. It is a retrenchment compensation is a compensation given by the employer to the employee who are removed typically due to economic reasons like company restructuring, like amalgamation, mergers, or cost cutting measures, etc. Okay. So now what happens if the employer is doing some retrenchment of employees? So there is a law in India. The name of that law is Industrial Disputes Act 1947. As per this law, no, the employer has to give compensation to the employees who are retrenched. Why? Because they were dependent on you, employer. They were earning their bread and butter. They were earning their income from you. And now all of a sudden you will tell them, before their retirement age only, you will tell them, tata bye bye, what this poor fellow will do, how he will run his household. Yes or no? And at this particular age, he is not going to get the employment also with other organization very soon. So give him a fair compensation. No, see, cost cutting, doing the business in your own way is your right. You can do it. But while doing it, if you are retrenching few employees, so we should take care of those employees also. The government should take care of those employees also. Hence, the law was made. Because if the law will not be made, retrenchment will take place. Many employees, if it was a matter of one employee, then the government would not have intervened. It's a matter of many employees. And if many employees are losing their job and the government is silent about that, not making any law for their, safety, to safeguard their interest, then it is bad. So at that time when law was made, taking care of the situation, that okay, employer, you want to do your business in your own way, you can do. You want to do the cost cutting, you want to do winding up of the company, you want to do the restructuring, you want to do the mergers, you want to bring new machines, you can do whatever you want. And because of these reasons, if many employees are thrown out by you, you have to take care of those employees, because those employees were dependent on you for their earning. And now all of a sudden you will tell these employees that your services are no more required, you can sit at home. How these poor people, how these employees will run their household? So give them a fair amount of compensation. That's why will not give. Why do we give? If it is not made legally binding on the employer to do that, no employer is going to pay that. Hence there was a requirement of a law, and a law came at that time. And what was the name? Industrial Disputes Act. As per the Industrial Disputes Act 1947, the employer will be usually required to pay compensation to the employee, and that compensation given on retrenchment, known as what? Retrenchment compensation. Understanding? Now retrenchment compensation is given to whom? Employee. That retrenchment compensation is also income for the employee, but we don't want to charge that entire income in the hands of employee. We are going to give the exemption, because that is a capital receipt, big amount. Okay, no, the exemption is given under section 1010. Exemption is given under section. How much exemption? A, B, C. Whichever is lower. A, B, C. Whichever is. A is actual amount of retrenchment compensation. B is maximum 5 lakhs. And C, amount as per industrial dispute. Because this compensation is given because of what? Industrial Disputes Act. You'll have to check the limit given in industrial dispute. Now we'll go to Industrial Disputes Act, and that law says that how much compensation should be given. The compensation fixed by Industrial Disputes Act. Compensation fixed by, that is 50 by 26, your salary into years of service. Have you seen a limit like this? Limit of Gratuity Act by 22, last drawn salary per month into number of years of service. 15 by 26. Number of years. Same. Copy paste from there. But instead of last drawn salary here, you will take salary of last 3. Salary of basic and DA. Because see, Industrial Disputes Act. What did I say? Industrial Disputes Act is also a separate law. And as per that law, if you are calculating this limit, to calculate this limit, salary has to be taken as per that law. And that law says, what salary should be taken? Basic and DA. Basic and, for the last month? No. For the last 3 months and average of that. And average of. Getting my point? So this average will be calculated for 10 months or only 3 months? Only 3 months average. But to calculate this average, you will have to take salary. Salary, what are you going to take? Basic, DA, in terms of turnover commission? No. That you take only if the limit is fixed by Income Tax Act. And this limit is not fixed by Income Tax Act. This is the limit which is there in the Industrial Disputes Act. And Industrial Disputes Act considers basic and DA as your salary, like it is considered in POGA also. So in POGA also, what is your salary? Basic and DA. Industrial Disputes Act, what is your salary? Basic and DA. That only we are supposed to take. If we would have taken this limit as per Income Tax Act, like for HRA we took, like for not covered by payment of Gratuity Act we took, like for leave encashment we took, yes or no? Everywhere we took the salary, basic, DA in terms, turnover commission. Yes or no? Why? Because those limits were fixed by Income Tax Act. And Income Tax Act, if any limit it is fixed by Income Tax Act, in that limit if salary has to be taken, salary has to be taken as basic, DA in terms and turnover commission. Everywhere in the calculation you are supposed to take basic, DA in terms and turnover commission. 2 exceptions. How many exceptions? Remember the exceptions. There will be no confusion. At 2 places, don't take basic, DA in terms and turnover commission, take basic and DA. Take number 1, POGA. Number 1, POGA. So when you calculate the gratuity exemption for POGA employees, calculate that exemption, you need last drawn salary. In that last drawn salary, what are you going to take? Basic and DA. And when you calculate the exemption for retrenchment compensation, that time also you require salary. What salary you will take? Basic and DA. DA in terms also you will take, DA not in terms also you will take. Yes or no? So basic plus DA. Last drawn? No. Drawn in the last 3 months and the average of that. And that average salary has to, average salary per month. That is your average salary per month. That average salary, no. Not, that is not for 30 days. That is for 26, excluding 4 days. So if you will divide it by 26, you get per day salary. Multiplied by 15. They are saying that 15 days salary based on the average of last, based on the average salary of the last 3 months. You have to calculate 15 days salary. And that 15 days salary should be given for every year of service as retrenchment compensation. This is requirement of industrial disputes. Remember this. Hello, sir. Now see how much we are going to exempt. Either the amount of retrenchment compensation which you have received, or maximum we can give you the exemption of 5 lakhs. or the amount as per industrial disputes. How much the industrial disputes act says, how much maximum we can give, and how much maximum you have, how much you have received actually. Out of these three amounts, the lowest amount we are going to exempt. Hello, understanding? Now this number of years of service, logic is same, huh? Here also the fraction of year be taken as full year. If the fraction is more than 6 months, if you remember, you have done this discussion in Hoga, yes or no? So now what are you going to do? You're supposed to calculate these three limits. Lowest of them will be the exemption. So out of your retrenchment compensation, this amount will be exempt and the balance amount will be taxable. Okay, the taxable amount is as good as profit in lieu of salary. This exempt amount is not treated as profit in lieu of salary because for this you are going to get exemption. But the taxable amount is as good as profit in lieu of salary. Understanding, be able to calculate 5 lakh is a maximum limit, lifetime maximum exemption. No, every time when you will get retrenchment, no, every time when you will get retrenchment, get 5 lakh. Nowhere it is written that it is lifetime maximum. Getting my point? Now see, sometimes the retrenchment compensation is also given as per the scheme approved by the government. So if the retrenchment compensation is given to the employee as per the scheme approved by the government, then it will be fully exempt. No need to do ABC, whichever is lower. Full retrenchment compensation will be exempt because it is given by the scheme approved by the government. Now what is this? See, whenever a big company is there, for example, a huge company is, okay, that is going for liquidation or amalgamation is taking place, don't you think the stakes of many stakeholders will be affected at that time? Just imagine such a big company, lenders will be there, how many creditors will be there, how many investors will be there, shareholders will be there, employees will be there. They are the stakeholders in the company. Lenders have some stake in the company. Hello? Then employees will have stake in the company. The creditors, suppliers of the company, they are having some stake. The investors, in the shareholders, etc., will have some stake in the company. Now, don't you think that if the company will be closing down or if the company is getting amalgamated, their stakes will be affected? No, their stakes will be affected. So, what are you going to do? The event, their stakes are affected because you are not affecting a single person. You are going to affect this decision taken by you, going to affect many stakeholders. If the government will not intervene, the company can affect the stakes, and because of that, many people will suffer a financial loss. Huge financial losses will happen to one person. No, many people, many stakeholders. So what are you going to do to take care of that? If you are going for liquidation, if you are going for amalgamation, company restructuring, etc. So the stakes of many stakeholders will be affected. What are you going to do for that? Government will intervene. Stakeholders are getting affected. And what type of loss they are going to incur and how you are going to settle those losses, make a scheme and give that scheme to the government. Government will check. Only then the government will allow you to close the company. Only then the government will allow you to do the restructuring, mergers, etc. Yes or no? That company will be compelled to make a scheme for liquidation, scheme for reorganization, scheme of merger, etc. Yes or no? And that scheme, the company will have to forward to the government. Okay, government will check the scheme. Okay, in the scheme, the company has written stakeholders, their stakes will be affected. They will lose. Okay, so the company is saying investors will lose this much. Investors' stake will be affected and investors will be losing this much. And the company is ready to settle in this way. Creditors, lenders will suffer. Okay. And the company is ready to settle in this way. Oh, 500 employees will lose the job. Employees are also stakeholder. 500 employees will lose the job. And company is saying that the company is going to give this compensation to these employees. Getting my point? Scheme is made. In the scheme, it is written that how the stakes of different stakeholders will be settled, including the employees, because employees are also the stakeholders in the company. Yes or no? And if few employees, because of this decision, will lose their job, okay, they have to be retrenched. So on retrenchment, the company is planning to pay this compensation to these employees. It is written in the, and now that scheme is given to the government. If the government finds everything suitable and everything proper in the scheme, what the government will do? Approved. Understanding or not? Scheme is, and as per this approved scheme, now the stakeholders' claim will be settled, including the employees. As per the scheme, now the employees will get the retrenchment compensation. Is the retrenchment compensation known by the government? Government has only approved, and that amount you have received fully exempt without any monetary limit. But if not as per the scheme approved by the government, yes or no, then ABC, whichever is, remember this? Hello? Okay. Now see, if an employer having an employment contract with a single employee, now we are not talking about many employees, tata bye bye. But can I say tata bye bye to one employee? Hello? I will terminate his contract of employment, or I will modify the terms of his contract. So because of termination of employment contract or modification of employment contract, employee might suffer some losses. With this employee, the employer will have contract. Because of this employment contract, he is going to work with the company and earn salary income. He will not be able to earn. Why? Because the contract is terminated. The employee suffer losses. Yes. What loss? Salary which he was supposed to get, he will not get. Why? Because the contract is terminated. Can the contract terms be modified? Terms and conditions of the contract be modified? And because of that also, the employee will suffer loss. How the modification will be done? The contract, it is written that your retirement age will be 65. Retirement age will be, terms are modified. Now your retirement age will be taken as 60. We don't want to keep any employee beyond 60. Retirement age will be reduced by 5 years. But if I was surviving for those 5 years, I would have worked and I would have got the salary for those 5 years also. Now if you have reduced the retirement age, because of that, what will happen? I will lose the salary for those 5 years. Earlier, at the time of joining, at the signing of the employment contract, the retirement age fix was 65. And now you are modifying the terms and you are making it 60. I will lose the salary of 5 years. Yes or no? You allow this thing to happen? No. Immediately go to the employer and tell him, what are you doing, man? Because you are changing the terms of contract, going to lose the salary. See, in the contract, at the time when we signed the contract, at that time discussed that I will get an increment of 20% in my salary every year. Now you are changing the contract, changing the terms, and you are saying no, 20% for these years. After that, only 10% increment. Ready, I am going to lose salary because of that. If with a single employee, employment contract was there. That employment contract is meaning your services are no more required. Tata bye bye. Tata bye bye is all for a single employee. This is not retrenchment. This is not. And now the terms are modified or the termination happens. At that time, the employee might lose salary. for the loss which will happen in his salary because of this termination, because of his modification, the employer might give him what? Compensation. This compensation is profit in lieu of salary. Compensation is profit in lieu of salary. Salary which you were supposed to get, you are not going to get that salary. In lieu of that salary, take this compensation. What is this? Profit. Lieu of salary. Yes or no? Salary which you would have earned. Are you going to earn that salary? No. Loss will happen. For that, take this amount as a compensation. What is this? Profit in lieu of salary. Fully taxable. Nowhere any exemption given for this. Profit in lieu of salary, and the amount will be taxable under the head salary. Don't consider this thing as a retrenchment compensation. Take my point? So, sir. Now, one question on retrenchment compensation. Let's go. Let's do one question on retrenchment compensation. Question number? Yeah. No, there is no question on retrenchment compensation for ICI study mat. Don't worry. We'll do the next concept. And on the next concept, VRS compensation, there is a question. Okay. Hello. Retrenchment compensation, understood or not? Hello. Exemption under which section? 1010B. A, B, C. Whichever is A, actual amount. B, maximum 5 lakhs. And C, amount as per Industrial Disputes Act. And what is that amount? 15 by 26 into average salary per month into number of years of service. Average salary per month you have to calculate. For that you have to take basic and DA of last 3 months. Add, divide by 3. Get average salary. Yes or no? Next one, VRS compensation we are going to do. VRS compensation, no? See, the full form is voluntary retirement scheme. Full form is even before your retirement age comes. Right now only you are taking voluntary retirement. Can you do that? Only if there is a scheme of the employer for such voluntary retirement. And as per that scheme, you were given an option that even before your actual age of retirement, you can take the retirement right now if you want. You don't want to work till 60 years of your age. Your retirement age was 60. What is your age right now? Oh, only 50 years. 10 years of service still remaining. Oh, no problem. If you want to take the retirement right now also, you can take it. Can you take that retirement? That retirement which you are taking voluntarily as per a scheme of voluntary retirement prepared by the employer. That voluntary retirement which you are taking, why would you take that? And why the employer will give you the option to take voluntary retirement? Understanding my question? Why the employer will give you this option to take voluntary retirement? And this option is given, what benefit the employer will get? Simple. There are many employees in my organization. Now it has become very difficult for me to handle these many employees. And actually speaking, these many employees are not required also. Earlier, when the work to be manual, there were no computers, there were no automatic machines. That time, I was in need of these employees and my business was also growing. So I hired these employees. Now, in my company, Automation is done. Many of the works are done by machine. Earlier computers were not there. Now computers are also there. So no manual work are required. Yes or no? Now, even if you are hired by me, even if you are employed by me, practically you're not adding any value to the organization. Why? You're just coming, sitting for some time, wasting the time full day and going home. Hello? And on top of that, I have to pay you salary also. So these type of employees have increased in the company. Now, if the company is not going to reduce these employees, the employee cost will keep on increasing because their salary, their benefits, every year the company will have to give the increments and all. Yes or no? And to handle these many employees is not required anymore to have these employees. Even if few employees will leave, it will not affect the operations of the company. Getting my point? So the company will give the option, because if the company will give the option and if few employees who are not actually adding any value, if they take their retirement early, the company will save huge amount of employee cost and the work will be done efficiently. So to achieve that efficiency, reduce the cost, the company will come with this option of voluntary retirement. A scheme will be prepared. Yes or no? Is this scheme beneficial for you, for the employee? Or I am going to lose my salary because if I take the early retirement, if I take the age is only 50 right now, I will come 10 years and I will earn salary. Hello, that salary I'm going to lose, no? Don't worry. Compensate that. Compensation. Known as PRS compensation. The loss will happen in your salary. You will take early retirement. What was your salary going on right now? Oh, lakh rupees per month. Now you are earning 1 lakh rupees per month. Yes or no? Minimum this much amount you would have earned for the next 10 years. Hello? For next 10 years of your service, how many months are remaining? 120. 10 years into 12. How many months are remaining? For those 120 months, take this 1 lakh right now. 1 crore, 20 lakhs. Hello? The entire salary for those 10 years, the employer will give you right away. So, employer would have paid more if you would have stayed. Here you are getting 1 lakh rupees per month. No, next year your salary would have increased to 1 lakh 25,000. Next to next year, 1 lakh 50. Next to next year, 1 lakh 60. Likewise, the salary would have increased. That would have given me more cost burden as compared to what I am paying you right now. Save that increased cost, huge cost in the future. I can pay you right now 1 crore 20. Still, it is less for me. Understanding? So for you, it is a benefit only. Why? Because all the retirement benefits which you were supposed to get, hello, gratuity, pension, leave encashments, everything the employer is going to give you right now also. But take the early retirement. Leave us because you are no more efficient and the company does not require your service. See, we are being very nice to you. We are not throwing out. Tata, bye bye. No. Because if we do that, that will affect the goodwill of the company. That will have a wrong impact in the eyes of public that the company is making a loss. See, no, company is throwing the employees. Company is not doing good. Profitability is less. That will affect the share prices also of the company. Goodwill will be affected. Share prices will be affected. Okay, public will have a bad impression about the company. The company does not want to do those things because those are very risky things. Yes or no? Giving an option. Want to take the retirement right now. Many companies in India, currently their voluntary retirement schemes are going on. Under that scheme, employees are covered, and those employees who are covered in the scheme, can take the early retirement. Even before their age of retirement comes, they can take the early retirement. So what benefit the company will get? Company will save huge costs. Company will have to manage lesser employees. Efficiency will increase. And what the benefit? What benefit will happen to the employees? All the retirement benefits which were supposed to come after 10 years. You're going to get all those benefits right now, like gratuity, pension, etc. Yes or no? And on top of that, you're going to get a VRS compensation. It's not a small amount, which will be a huge amount right now. Hello? 1 rupee in future is more beneficial, or 1 rupee in present is more beneficial? Time value of money, no? If you are going to get 1 crore 20 lakh right now as a compensation, that is a huge amount. Even if you bloody keep this amount in the FD with interest, your entire life you will spend. And if you don't want to put this in FD, put it in some business, start something on your own. Or do one thing, put it in the FD and start doing job somewhere else where your requirement is there. But we don't require your services. This scheme, voluntary retirement scheme, will be a win-win situation for both employer as well as employees. Employees will get the opportunity to leave out of the organization, join somewhere else where his services he can give. Yes or no? And he'll get a good amount as a compensation also. All the retirement benefits also he will get. And employer, reduce cost, efficiency increased. It's a win-win situation for both employer and employee. Hence, this scheme is also known as golden handshake. What? Golden handshakes. Yes or no? Now see, as per this scheme, if you are covered in this scheme, you can take the early retirement, means voluntary retirement. And voluntary retirement, if you take, you are going to get the compensation. So it is a compensation given by the employer to the employees as per the voluntary retirement scheme. Now, who will prepare the scheme? Who will prepare the scheme? Remember, the employer will have to prepare the scheme according to the guidelines prescribed by the, what are the guidelines prescribed in the IT rules of your business? You are an employee. You are not supposed to prepare voluntary retirement. Who will prepare the scheme? Employer. And employer, while preparing the scheme, has to follow the guideline. Few examples I'll give. Guideline says that employer will prepare a voluntary retirement scheme. In that voluntary retirement scheme, the option to voluntary retirement should be given to all the employees. Not be made for few specific employees. No, it should be prepared for all employees. See, group wise, different scheme can be prepared, but the option to take the voluntary retirement has to be given to all the employees except directors. Except, why? Directors should not be covered in voluntary retirement scheme. Why? Because directors manage the company. And what if they are also covered by voluntary retirement scheme? All the director takes voluntary retirement. Study, entire board is empty. Now who will run the company? Understanding? Except for the directors, all other employees should be covered. Employees covered, their age should be 40 years or more. Or they might have given services of 10 years or more in the company. Those employees should be covered. And after the employees are covered, these employees who are covered in the scheme and taking the voluntary retirement should not be employed by the sister concern, meaning another company of same management. Tata, you know, Tata is a management. So you are in Tata Motors. From Tata Motors, you are taking voluntary retirement, and in TCS, you are joining Tata Consultancy Service. So taking a voluntary retirement here and joining in another company of the same management should be avoided. Okay. And the employees who are leaving because of voluntary retirement, who are leaving, their place should not be filled. That is the scheme you are bringing for what? Reducing the number of employees. So this should result into the reduction in the number of employees. Old employee is going and in his place you are taking a new employee. Should not happen. Getting my point? So these are certain guidelines. And in the guidelines also it is written that minimum this much amount should be offered. Two options are given. This much amount should be offered as what? Voluntary retirement compensation. 3 times of the last drawn salary for every completed year of service. 3 times of the last drawn salary. So whatever last drawn salary was there, 3 times of that amount should be given to the employee as PRS compensation for every completed year of service. If he has completed 25 years of service. How many years? 5 years are still remaining, but he is taking voluntary retirement right now. Yes or no? So how much? 5 years are still remaining and he is taking voluntary retirement. But by now, he has served for 25 years. How many completed years? 25. For each completed years, times of the last drawn salary should be given as PRS compensation. So last drawn salary was, example, 1 lakh. Last drawn salary was 1 lakh. 3 times of that, 3 lakhs. 3 lakhs into 25, 75 lakhs. Or last drawn salary should be paid for the balance months of service. Last drawn salary should be paid for balance months of service. How many months of service are remaining? 5 years are still remaining. Every year having 12 months, 60 months are remaining. So for 60 months, 1 lakh was the last drawn salary, should be given as voluntary retirement compensation. So either this 75 lakhs or 60 lakhs, whichever is higher, should be given as a compensation. That should be given in the scheme guidelines. So these guidelines, even if you don't remember, no problem, because these guidelines employee does not have to follow. While preparing the scheme, these guidelines have to be followed by. So I am your employer. I have prepared a voluntary retirement scheme. I have prepared a voluntary retirement according to the guidelines prescribed by IT rules. Now you are an employee who is covered by this scheme. You are an employee who is covered by this. Now you are taking the benefit of this scheme and you are taking the voluntary retirement. Can you take on voluntary retirement? Will I give you the compensation? Hello? That compensation which I am giving you is as good as profit in lieu of salary. It's as good as profit in lieu of salary. Salary which you are not going to get because of early retirement. Against that, you are going to get this compensation. Is as good as profit in lieu of salary. But this will be exempt under section 1010C. How much? A, B, C, D. Whichever is A, actual amount. B, maximum amount. That is 5 lakh. That is 5 lakh. And C and D, I have already told you. Amount prescribed in guideline. Amounts prescribed in. So, this or this, whichever is higher, you have to take. But if you take higher and then A, B or higher amount, whichever is lower, so ultimately A, B, C, D, whichever is lower only. That is going to happen. Understanding? So do one thing. Last drawn salary you calculate for your employee. What was the last drawn salary? 3 times of that amount. 3 times of that amount you have to give the employee for every completed year of service. In this last drawn salary, in this, what salary you will take? Salary you are supposed to take, no? What will you take in this salary? Basic and DA. Is it a limit prescribed by any other law? Or it is the limit as per income tax? So in this, we have to take basic, DA in terms, turnover commission. Of which month? Last month. Ignore the month of voluntary retirement. Immediately preceding month. What was your basic, DA in terms and turnover commission? That is your last drawn salary. Into 3. Into completed year of service. And again take that last drawn salary, multiply by balance months of service. Balance months of service means how many months of service are remaining till the actual age of retirement. If you are taking voluntary retirement right now, if you are taking voluntary retirement, 7 years of service is still pending. Then 12 sevens are 84. So 84 month service is still remaining. If 3 years of service remaining, then balance months of service is 36 months. 3 years, 8 months. You are supposed to retire after 3 years, 8 months. But you are taking voluntary retirement right now. So how much is the balance months of service? 36 plus 8, 44 months. So that for balance months of service also, last on salary, they have been given as what? PRS compensation. So A, B, C and D. These 4 limits you are going to check. Whichever is lower, that amount will be exempt under section 10C out of your VRS compensation. The balance VRS compensation will be taxable. Understanding? But wait, if you want to claim this exemption, if you want to claim this, then VRS scheme must be prepared by a specific employer. Meaning, you must be an employee of a specific employer. If any other employer will make the scheme and he is giving you what? Voluntary retirement compensation, then it will not be exempt. If you want to take this exemption, if you want to take this, then this exemption will be available for voluntary retirement compensation, which is given by the employer as per voluntary retirement scheme. Yes or no? But the scheme has to be prepared by certain specific employers. If you are taking voluntary retirement from these employers, only then your PRS compensation will be what? Exempt. So your employer has to be a public sector company. Which company? There are 2 types of company, public sector and private sector. What is the difference? What is the difference? Public sector companies are public limited company. Public sector companies are public limited companies where the government has majority stake. But the government has, that becomes public sector company. Hello, sir. But some public limited companies are in private sector. Some public limited companies are in private sector, like Reliance. Reliance is also a public limited company, but it is not a public sector company. It is a private sector company. Because the majority shareholding is not with the government, it's with private individuals. Getting my point? So, public sector companies, private sector. Who should be your employer? Employee. You are getting VRS compensation which you want to exempt. If you are getting VRS compensation which you want to claim as exempt, who should be your employer? From which type of employer VRS compensation come? Your employer should be a public sector company, or it can be any other company. In short, any company. You are the employee of any company, public limited, private limited, hello, public sector, private sector, listed, unlisted. You should be the employee of any company. Yes or no? Or any authority established under any law. Any authority which is established under a law. Okay, you can be the employee of that authority also. Then you can be the authority of any local authority. You can be the employee of any cooperative society. You can be the employee of any university or IIT. IIT, you know, Indian Institute of. So you can be the employee of any university or IIT. You can be the employee of notified institutes of management. Okay, you can be the employee of central government or state government. You can be the employee of notified institute having importance throughout India or in any state. So if any of them are your employers, and they have prepared a scheme of voluntary retirement by following the prescribed guidelines. And as per the scheme of voluntary retirement of these employers, if you are taking voluntary retirement and you are receiving VRS compensation, only then this compensation will be A, B, E, D, whichever is lower. Understanding? Hello? So now, maximum limit of 5 lakh is once in a, that 20 lakh limit of gratuity. No. That was lifetime maximum exemption. That was, you can take the gratuity exemption as many times as you can in your lifetime. But all taken together cannot be more than 20 lakhs. One third or a half was given in pension. That was also lifetime maximum exemption. 25 lakhs given in leave encashment. That was also lifetime maximum exemption. This is not lifetime maximum exemption. This is once in a lifetime exemption. In your entire life, you can claim VRS exemption only once. Not again and again. Every time joining a company, taking a VRS. No. Only once. Getting my point? So you can join as many companies, you can take VRS from as many companies, but don't come for exemption every time. Exemption will be available only once in your lifetime, and that also maximum 5 lakh. Understanding? Hello, sir. Next one. Exemption under 1010C. Can you see? If you take 1010C exemption, if you take, okay, then relief under section 89 will not be available. So there is one relief under section 89 that we are going to do in the end of the chapter after PF and everything gets over. Okay. So in that relief, it is mentioned that if you are taking VRS exemption, relief will not be allowed. If you are taking VRS exemption, relief will not be allowed. If you want to take that relief, you'll have to leave the exemption. So the entire VRS taxable. If entire VRS is taxable, meaning you are not taking any exemption, you are not taking any exemption for VRS, only then you can take relief. But if you are taking the exemption, relief cannot be, both the things are not available together. So take the 1010C exemption, forget about relief. Forget about. But if you want to take the relief, forget about the exemption. Both the things cannot come together. Understanding? Hello? And last one. If you follow 115 BSc or you don't follow 115 BSc, 1010B and 1010C, both exemption will be available. Meaning exemption for retrenchment compensation will also be available and exemption for PRS compensation will also be available if you follow 115 BSc or you don't follow 115. Understanding? Now, the next part is perquisites. But before that, one small question we are going to solve. So, small question, very small. Question number 9. See how difficult this question is, you will come to know. Mr. Datta received voluntary retirement compensation of how much? After 30 years and 4 months of service. He still has 6 years of service left. Meaning, at the time of taking the voluntary retirement, he comes to know that he can still work for 6 more years. But before the age of retirement comes, before that only he is taking voluntary retirement. So 6 years of service still remaining. Getting my point? At the time of voluntary retirement, he was drawing a basic salary of 20,000. Dearness allowance which forms part of pay. The DA which forms part of pay. In terms. Hello? In terms. How much? 5,000. Compute taxable VRS compensation assuming that he does not claim any relief under section. And if he claims relief under 89, then full 7 lakh will be taxable. then no exemption. But if it does not claim any relief, can he claim the exemption? Tell me how much. A actual amount, which is B maximum, is 5 lakhs. B last drawn salary you are supposed to take, multiplied by 3, multiplied by number of completed years. Yes or no? So what was the last drawn salary? Basic DA in terms and turnover commission. What was the basic? 20,000. DA in terms 5,000. Turnover commission nil. So last drawn salary was 25,000 into 3 for every completed year of service. So completed years were 30. This will be 22 lakh 50,000. Everyone got this? Yes sir, no sir. Limit D will be, again you are supposed to take last one salary, but multiplied by balance months of service. So 6 years are remaining. How many months are remaining? 72, no? So multiplied by 72. But 6 into 12. This will be 72. This will give you 18 lakh. Lowest amount is how much? That 5 lakh will be exempt from 7 lakh. The balance 2 lakh will be taxable. Please check. Balance 2 lakh is taxable. How did you calculate A, B, C and D? Whichever is lower. Done, sir? Sure, sir? Take a small break of half an hour. Half an hour. Okay, then again we'll meet and we'll take a lunch break. So take a small break of half an hour. Half an hour we are meeting and we'll start from perquisite. Okay?